Welcome to the Farms.com Risk Management Daily Commodity Market Bottom Line Video Report. It's Mo Agostino, Chief Commodity Strategist with Farms.com Risk Management. It's USDA report day. Let's get right to it. USDA didn't disappoint. From what we're hearing from farmers, the farmer in North America was going to plant more soybean acres simply because they're complaining about high input costs, high fertilizer costs. It's going to cost U.S. farmer $200 more per acre to plant corn this year versus beans. But the USDA is saying something different. Maybe the farmer's saying one thing and they're going to do another. Nonetheless, acres and yield are going to be subject to change, so the market going into this report really tends to focus on the quarterly grain stocks report. The last 30 years, that report, particularly the corn stocks report, has moved markets up or down 2.6%. In the last 5 years, as much as 11 to 15%, both up and down. Unfortunately for corn and wheat, it's down today, slightly higher in the soys. Corn acres come in at 89.19 versus 88.7. That's up 0.49 million bushels. When it comes down to the balance sheet, not much of a difference here. You can see that if yields drop, and you don't need a lot because it's a record demand situation from last year, ending stocks have dropped below $1 billion. That's a recipe for higher prices going forward. So short term, bearish, but long term, who knows? It's up to weather from here on in. Soy's come in at 84.64 versus 85.9. That's a drop of 1.26, and that's also bullish long term here. We're not going to see as many bulls as we all thought, and so the market's going to probably rally here near term. And then wheat comes in at 55.37 versus 55.8, kind of in line. The stocks report for corn, this is the one the market tends to focus on post-report because it's still about the old crop balance sheets and where ending stocks are going, and it determines pricing. The funds were record short pretty well going into this report on wheat, corn, beans. So I was looking for maybe a pop of some sort, but we're not getting it. We're doing the opposite of what the market thought. That's always the case. But corn, 7.745 versus 7.6 estimates. That's an additional 145 million bushels. You're going to add that to the March ending stocks. That means April's ending stocks are higher, back to 1.9 billion. That's not good news short term. So look for corn to test maybe the lows at 375 a bushel. Soybeans down 16 million at 1.334 versus 1.35 billion bushels. Again, making ending stocks for old crop a little tighter, down into that 370. Still not enough to really get this thing going. Again, whether the market pays attention to new crop soys acres, we'll see. But the focus will be on the corn stocks, and then wheat up 16 million, 1.124 versus 1.14. So bearish corn, bullish beans, bearish wheat, but weather will dictate how prices end up going here, particularly on the wheat side. Wheat is the one the market's going to focus on because it remains quite dry in the northern plains and the Midwest. In other news, we got wheat crop conditions pretty well benign numbers, except for Nebraska. Nebraska came in a little bit lower in the very poor category. Corn planting starting to pick up finally. Some states reporting some planting progress, a little bit behind the last year and the average, but overall not too much of a concern at this point. Currencies coming back a little bit, so euro dollar falling, Canadian dollar falling, US dollar almost back to par again, getting back to that old trend that we saw about 2 weeks ago. We'll see where it takes us, but in the meantime, that high US dollar is still going to put a lid on grain prices. Till next time, thanks for watching. Have a great day.